All right, so this is Coach Josh, and I'm going to be doing a quick market update to let you have an understanding of what the markets are doing and what we can expect from tomorrow. So markets closed about 30 minutes ago. So I'll just quickly do a review of the charts right here. So the charts are always telling us a story, and if with time, uh, we can start to understand the language that the charts are speaking. So as you can see here, this is gold. I'm looking at the chart for XAU USD, and just a moment. All right, so I'm looking at the chart for XAU USD, and so if you can see on the screen, gold has been in a parallel channel. Okay, we've been in this parallel channel since what's this? This is February of 2024. So this tells you that this is a very strong trend that you want to pay attention to. You know, from the bottom, we came to the top, and then, we danced around it, respected the top again, came down, okay, hit it here again for support, and we bounced off that. And, so what happened here is that, you would have expected that once we got to the top of the channel, that gold would have come down, but it often happens because everybody's expecting that. Usually the market makers, the institutions, the big money players will then cause the price to go above that. So all the late buyers will FOMO in, buy, 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 and then that's when they they return the price. So price is kind of coming back into fair value. Okay, so let's just take a look at the chart a bit more closely and see what the charts are telling us. Okay, so if you look at the way the candle closed today, what information can we glean from this candle close? So this candle is an inverted hammer. And whenever you find the inverted hammer at the bottom of a downtrend, it usually signifies a likely reversal in price. Whenever you find this candle, this, let me just zoom in so that it's right. So long upper wick, small body, and almost non-existent wick low, right? So that thin line is what we call a wick, just like a candle wick. So whenever you find this candle at the bottom of a downtrend, it signifies a possible reversal. Now, if you pay attention, you'll notice that in this correction, so as we started correcting, we corrected to a daily support. So here we have support, right? You can see that this line here. So when we were coming up, let me get my brush. So while we were coming up, you see that when we got here, when we got to this region, price respected that region and then came back. So we will call this area so at that time it was resistance. Think of it like a ceiling. Okay, so when price was on its way up, that place acted like a ceiling, and price rejected off of that place, right? Let's use a different color. Let's use a brighter color. So price, as as the candles were, as the candles were coming up, as the candles were coming up, it couldn't go beyond that point. So just imagine that there was an imaginary ceiling. Actually, what was happening is that the sellers kicked in and forced the price back down. Okay. And so in trading, we always say, look left, look left. So now price is here, price is falling down, and we're trying to trying to predict, trying to understand where is price likely going to stop falling. So when you look left, so okay, let me delete let me delete the let me delete the support and show you how you can put that in your charts. So here we are. Price is dropping. We're trying to understand where could price possibly bounce. What we then do is we look left to and look for a previous area of resistance. So what happens is a resistance on the way up will become a support on the way down. Think of it like a ceiling, right? Like a ceiling, or just imagine that you have a house with multiple floors. So as price was trying to climb up the stairs, it came up this floor. And so for the people downstairs, this is a ceiling. Okay, so let me just put a line there to identify it. So coming to my trend tools here, if I click on the arrow, I'll use the horizontal ray. That'll give me a straight line to the very end. So I'm gonna just place that line on top, right, on top here. Let me use white. Yeah. So I've placed it at this place. So when price was climbing up the stairs, hit the ceiling, came back down, eventually got enough momentum, enough energy, and it broke above. So it broke above the resistance. I'm using ceiling as an illustration, as kind of like an analogy. Yeah. So now price is above, price is now falling down, and we're trying to estimate where will price possibly hold. But I mean, it's not just uncanny. Look at where we rejected when we're going up, but now price was falling down, and at exactly that same line, price held. So we call that a support. So a ceiling going up becomes a floor. The technical term is a resistance becomes a support. So we have a support there. Are there any other possible supports that we can identify? Yes, they are. So if I take my horizontal ray again, and I just try to scan, if I try to scan, so right here is another support zone. So if you look here, we have a touch point here. So we have it now. I'm using the body closes, not the wicks now. I'm using the body closes. So we have a body close, a candle close here. We have another one here. You see that price held here. We have another one here as well. So that will be, so if price were to continue falling down, that will be another area of support. Um, it looks like we have another area of support right above. So we could even move this up first. We move this up here. See, we have a touch point here. We have a touch point here. Um, here, 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 here. Yeah, so this is actually support. So that's 2876, another likely area of support. So if price were to break below this point, this would be another zone that we could possibly look at as another area of support. Okay, so it's important to know how to identify those key levels, your support areas, your resistance areas, because they help you in estimating price movements, price action. Okay, so we say this is an inverted hammer, yeah, and so it indicates a likely reversal. But I want us to also look at something else. So there's what we call the Fibonacci retracement tool. So the Fibonacci retracement tool, whenever there is what is called an impulse move, so whenever you have a big move to the upside or a big move to the downside, it's called an impulse move. Okay, so the Fibonacci retracement tool helps you to identify possible areas where price could bounce off, So we've had this big move to the upside, and now price starts to retrace. because that's how the market moves. Whenever it goes up, it's going to retrace, goes up, it's going to retrace. But it's been discovered that there are certain areas that price often starts to bounce back. So if I take my Fibonacci retracement tool here, so when you come to your left, first tool, second tool, third tool, the very first one is the Fib retracement tool. So I click that, and then from the bottom of the the impulse move, the last impulse move, okay? So you take it from the bottom of that move, I'm taking it to the top, and what you will find is that very good. Um, let me remove let me remove the indicators, all those several lines that we're seeing on. Let me hide my indicators to make my chart good, to make my chart a lot clearer. So as I've put out the Fibonacci tool here, you can see that there are different lines. Okay, this red line is the 236. Okay, that's the first fib level. We have the 382, and we can see that when price was retracing, price held there for a while. Okay, the 0.5 price didn't hold. But look here, this 0.618 is called the the golden ratio or the golden pocket. So many times, whenever prices move, whenever there's a retracement, the 0.618 and the 0.786 are very important areas, very, high probability areas for price to bounce off. So usually if you take a trade from here, it's usually a high probability trade. So look at what we have here. We have a confluence of two things now. Already we have established that this is a support area. So price came down here and it bounced off this area. That was yesterday's candle. But it also coincides with the 0.618 Fibonacci zone, right? So, um, so this is the Fibonacci zone, the 618. This level here is the 786. So let's just identify that I want to take the Fib tool off, but I want to mark that line on the chart so that you have an idea of where that is. So that's the 786, and we have the 618 in this zone. So now I can take off my Fib tool, make my chart a little bit clearer. Okay, so this here is my 786. Let me just quickly label this as my 786, 0.786. There we go. Let's put that in yellow. Okay. So if price were to break below this, then we likely will get a bounce from here. Now let's look on the 4-hour time frame. Let's change our time frame and have a look. So whenever you're doing your analysis, it's always good to start from a higher time frame and come down to a lower time frame. Some people call that the top-down analysis. You want to start from the weekly time frame. From the weekly, you come down to the daily. From the daily, you come down to the 4-hour time frame. And then once you have an idea of the overall trend of the market, then start to look for entries on the lower time frame, like the 1 hour, like 15 minutes. Some people like to trade on the 10-minute time frame as well. So on the 4-hour time frame, we see that the trend is a downtrend. So let's identify our trend. So I pick first tool, second tool. The very first one is the trend line. So when I pick that, I tap on that, I'm joining the bodies, the tops of the top of the bodies of the candles. I'm not using the wicks, I'm using the bodies. So usually you want to be consistent. If you want to use the wicks, you can, but you can also use the bodies as well. So this shows us that we're still in a downtrend. Okay, we're still clearly in a downtrend. Price came down, touched this, came down. when we got here again, rejected. So until we break above this, the market is still bearish. However, um, this was a low. So as price was coming down, we made a low here. Unfortunately, we did not make a higher low. So because we respected this, had price broken above this level here to be like, let me use the week. It broke above 3,053. Price came above 3,053. Price came above like that, 3,003. Then we could have said, okay, now we've made a higher, um, so high, low, high, lower high, lower low. Would have made a higher low here, right? So this was a previous high, would have made a, sorry, did I say higher low? This was the previous high, would have made this high would have been higher than previous high. And so that's a change, some call that a change in structure. So that has not happened yet. So we cannot yet say that we have a trend shift. We don't have a confirmation of a trend shift. However, on the daily time frame, we've seen the inverted hammer that indicates that we're close to a reversal. We also had a strong support area. So what could very possibly happen with tomorrow is there could be a possibility of price coming down to retest, and then we break above, okay, and then we do that, create. So here, this high will be higher than the previous high. And then we now have a higher low here, higher than this low. And so with that, we could say that we're now off to the races. Okay, so price could again come back, touch here. So these are possibilities of what we could expect to happen tomorrow. Now looking at the macro situation of the markets, the trade wars between the US and China, because all this tariff thing is really majorly between the US and China. Let me remove this ugly drawing and maybe try to make my drawing a little bit more cute. Let's look for, oh, okay. Need my picking tool. Pick that. So this trade war really is actually between the US and China. So if we see something like this tomorrow, price breaks like that, we could very well see a move like this play over the rest of the week. And so some experts have revealed that the reason gold tanked is because a lot of the hedge funds and the banks and the financial institutions were stuck on the wrong side of the trade. So, they have their investments in the stock market, the Nasdaq, the S&P 500, and all of that, and they were about to get margin called. They were about to get liquidated. So they had to sell off their gold to try and, pump up those positions, but the markets kept crashing. So this sell-off that we saw in gold was really as a result of the panic in the stock market. So a lot of the traders, the big time traders, the big money guys were about to get margin called, get liquidated and lose their accounts, in billions and billions of dollars. So they had to sell off their gold, okay, to try and prop up those accounts. But with what's happening in the stock market, many people are going to begin to, run to gold as a safe haven, as a store of value. So there is a good chance that we see, an initial drop off. We may come back to test these lows. Okay, so let me delete this. So what we could see, so we may either go straight direct, or we may first come back to touch these lows, and then come back, something like that. Um, and then gold will continue its upward momentum. So this is a good possibility. But if the markets continue to crash hard tomorrow, so Trump has announced that they've increased the tariffs against China, so it's now 104% tariffs against China. And that's because China retaliated to the tariffs that Trump announced. So if China decides to further escalate the situation, it's just going to be a bloodbath tomorrow. Everything is going to crash down further. So we may very well then see, gold coming to, coming down, breaking this support, coming down to the 786. If we, I mean, so I expect that we'll have a good bounce from there. But if we don't, we're very likely to have a bounce from 786. But if we don't, if we have a bounce and we reject, then that's the next area of support that we're coming to test. But um, anyway, so usually you don't predict, you just let the charts tell you what to do. So for me, if we come back down, I would then come down to the lower time frames. Okay, I'll come down to the lower time frames and watch the reaction of price. Okay, so before you make your entries, you already know that this is a key area. This is a support. So when the candles are coming down, you then come down to the lower time frames and watch how are the candles responding. Okay. If we have momentum to the downside, we'll just break through it. But usually if it's going to reverse, the candles would form there, kind of stop, go up a bit, come back and then continue its upward movement. So that could be so if you're an aggressive trader, you could decide to place an entry here and just use a tight stop loss. Okay, put your stop loss below there and do not bet the farm. That's if you want an early entry. For a more conservative approach would be to wait for a break of trend. Wait for a break of trend. That's so a more conservative approach. This is the downtrend. So you should wait for a break of trend, wait for a retest, and then you put your entry there. Okay, so this is a general overview of gold. I hope it gives you an idea of what to expect tomorrow.